Good afternoon, everybody. Welcome back to This Week in Mortgage. I hope you had a great weekend, and I hope your family is staying safe. The stock market today, I assure you, wish that the opening bell was actually the closing bell, considering what happened, and we'll get to that. The 10-year Treasury closed today with a 1.30 yield, down about 2 basis points from last Monday afternoon's close, relatively unchanged. Stock markets, though, big selling today. Some are calling it the September slide. The three main reasons when we woke up this morning and saw the futures down the way they were: big Chinese real estate company, second largest, I believe, is in jeopardy of defaulting on their debt. Looks like a big company in China sneezes, our stock market catches a cold. That's not a great thing. Second thing, the Federal Reserve is meeting this week. A lot of folks on Wall Street are scared that they're going to take away the punch bowl, and they don't know how to react. So when you don't know how to react, uncertainty creates selling. And the third thing is looks like it's the World Series or the Super Bowl now, the annual debate over the debt ceiling in Washington and our government shutting down. I'm sure at 12:30 at night, when the government shuts down for a half an hour on one of these Friday nights, they'll figure it out. But it's getting rather annoying that they do this every single year. That said, stock markets have been up for approximately a decade, with the one little blip for last year. Last year, in March, we are up 80% on the major stock market averages. If you told somebody a global issue was going to happen and markets would retreat and then run back up nearly double, someone would think you're crazy. But that is what happened. Let's see what happens if people don't find an excuse now to sell their stocks. I believe the point for most people of buying stocks is to realize a profit. And until you actually sell, you can't realize it. There may be some realization between now and the end of the year. I've been pounding the table all year on the three main issues for the economy: jobs, inflation, and supply chain problems. There's actually a new problem that we have as a society: shipping and delivery scarcity. And I'm actually going to use the show on Showtime, Billions. If any of you watch it, it's a great show. Not yesterday's episode, but last week's episode, they actually had a shipping problem. And this was a great example of life imitating art. Now, the shipping problem they had wasn't because of what we have. They have a different narrative and a different storyline. But the point is, they couldn't get their goods across the Atlantic from Italy to New York, and they then had to go in a hurry buy $10 million worth of pizza ovens. Now, these are the real life things that people are dealing with here. And I guarantee you those $10 million worth of pizza ovens are not really worth $10 million, but they needed them. And that scarcity is causing inflation. And they did a great job on the show last week, which I'm sure is completely unintentional, to coincide with what's going on with our shipping and delivery scarcity problems. They create inflation. They also create FOMO, the fear of missing out. And that FOMO will make people run, not walk, to buy things that they don't necessarily need or that they wouldn't necessarily spend that much money on. But that is a great real life thing, and we can look at it as the buy now button that we all see on the internet every time we go shopping. We have that FOMO that it's going to be gone, and that is causing inflation on its own. The Federal Reserve is certainly in a pickle right now. As you know, we're not creating enough jobs to sustain the economy on a long-term basis once all of this stimulus runs out. The Federal Reserve is going to have an issue when inflation keeps rising, but people aren't working. They would typically have to raise rates at that point. They're not going to be able to raise rates now because people aren't working. It's going to be very interesting to see what the Federal Reserve does and how they get us out of it this time. We're not in it yet, but we'll get there. Matter of months, I believe so. And housing, strong as ever. And the nice part about housing right now, it's becoming more normal and a little bit less annoying when it comes to people making offers. My clients now, we typically in the last year have had to write 9 pre-approval letters before they get an accepted offer. Now we're looking at about 3 or 4, and I'm going to take that as the normalization and less annoying aspect of the housing market. And mortgages right now, I've been doing this nearly 18 years. Never been stronger. We've never had better products. And the most important thing about mortgages when it comes to our economy is they are completely liquid. There is a secondary market, and they're easily sold off, and nobody's going to get stuck holding the bag, and the buck will not stop moving, as that is actually what caused the financial crisis about 12 years ago. No one could move the mortgage paper off their books, so every bank had to go mark to market, and at that moment, they essentially became insolvent. I hope you have a great week. Please stay safe. If you have any questions, please reach out to me.